In this episode, we're going to talk about day trading versus buying and holding stocks. That up on YouTube. While you're on YouTube, you need to look up #everythingmoney and subscribe to the channel so that we can get it going. Did you already press record? I feel like I saw you. I saw you in my peripheral and I knew you press record. Hey everybody, what's going on? My name is Arman Vakili and this is the #everythingmoney show where we talk about everything that has to do with money. And today we're talking about day trading versus buying and holding, which is actually a really big topic. I know so many people that love talking about this kind of stuff. I know so many people that they hear the results that they're getting from day trading, or the results that other people are getting from day trading, the results that some people are getting from buying a stock at some point and then going on and just, you know, it's gonna go up to 2,000%, something like that. Like, you hear some really crazy stories that are anomalies. It's not something that happens to every single person that goes into the day trading game, or to every single person that goes into the stock trading game, the buying, and like, it's an anomaly, which means what? It happens very far and few in between. However, because the results are so big and because the results are so drastic, people get turned on by it, and then this idea of, oh my God, if I turn my $100 into $100,000 because I bought into the right company at the right time and I did all this, then I would be set, and then I could do this, and so your mind starts running, and I've been guilty of that before. But this is what you need to understand, okay? So buying and holding is, in my opinion, and this is all just my opinion, okay? I am not a securities advisor. This is not something that I do for a profession anymore. So if you are going to do this, if you're gonna buy stocks, if you're gonna buy securities, if you're gonna buy anything that is variable, that you could lose your money potentially, you need to go speak with a licensed advisor who is currently actively licensed. I'm not currently actively licensed. I used to be. The reason why I got out of that game is because it was just really stressful, right? So it's not just your own money that you're losing. When you have a few dozen clients or a few hundred clients who have given their life savings to you, and you lose it, or you lose 20% of it, 30% of it, and then you have to talk to freaking 2 dozen, 3 dozen people that same day explaining to them why you just lost all of their money. It's just a really, really stressful game. So I'm going to talk to you from the perspective of somebody that has seen who succeeded, that has seen who failed, and then what happened to me in my personal life when I went into day trading and stocks and stuff like that. And then if the lessons that I've learned, right, that I'm going to share with you, if they serve valuable to you, then by all means use them. If they don't serve valuable to you, don't use them. In either case, think for yourself. Think for yourself and make the decisions based on your comfort level, your risk level, anything. Does that make sense? So all of that's my disclosure on this topic. Now, let's talk about the actual thing. Let's talk about the actual process of day trading versus buying and holding. I personally feel like you'll have a better chance making money in the markets, like in stocks and stuff like that, if you do a really, really comprehensive due diligence on the company that you buy. For example, there are people that say, I'm just gonna go buy these 500 companies, and because of the fact that I own 500 companies, some of them are gonna lose, yeah, other ones are gonna win. So I'm just gonna hope the average is gonna be high enough. That's literally gambling. Like, you're going and saying, I'm just gonna leave it to chance to see what happens with this portfolio. And that doesn't make sense, okay? If you want to get the results of every story that you've heard that they made so much money, you need to take the approach that those guys took. Warren Buffett, who is arguably the most famous investor and the most successful investor in the world has a very simple philosophy. He says, I read 80% of my time. 80% of my time I am reading, just reading. And then if I feel like I have good enough information, I'm gonna make a move. Make a move meaning I'm gonna go buy this company, or I'm gonna go buy into this company. So think about this. He spends 80% of his time reading, just trying to figure out whether or not he should make that decision, right? So that's called due diligence. That's called really, really knowing where you're putting your money, right? And that's what's going to end up making or breaking making or breaking that investment. Is going to be all dependent on how well you read into that company. One of his other rules is this: if I buy one stock of a company, because there are some people that they buy thousands of stocks because they come to the table with stupid money. You know what I mean? They come with the table with so much money that they can go buy a few thousand stocks. And then you have penny stocks that cost a couple of cents, so on and so forth. So that's a different story. We're talking about like normal stocks. So he says, if I buy one stock of this company, I'm gonna treat it as if I own the company, because technically you do. Technically you own a piece of this company. And so if you're going to go ahead and buy a piece of this company, you might as well treat it as if it's your company. Now, is it practical for you to buy one stock of Coca-Cola and then expect to speak with the CFO and the CEO? No, probably not. However, you can look into literally everything that's going on with that company. You can Google their name. You can read as many articles as possible about what's going on. Read all the news segments. Read everything that's going on in the public eye and what's going on with their press and public. Literally everything. Read everything you can about them to see what's up. Now, let's say you notice some kind of a loophole or some kind of chink in that company's armor that leaves them exposed to corporate takeover, or it leaves them exposed to lose assets, whatever. Could you write an email at that point? Or could you find their CFO on LinkedIn? Which, by the way, you can. So you go find their CFO or their whoever, you know what I mean, chief operations officer, administrative officer, somebody in the company that you can actually contact and say, hey, listen, this is probably not going to be a big deal and it's probably not going to hurt you guys, but I feel like you should look into this. I found this and I'm just passing it on to you. The reason why is because I'm a stockholder and I feel concerned about this company. That's if you're buying the stock and then you're going to hold on to it because you believe that this company is going to end up being a big deal, right? That's buying and holding a stock. That's a lot more likely to succeed than the person who says, hey, listen, I'm going to get into the game. Every morning, I'm going to wake up at 5:30 because the markets open up on the East Coast at 9 a.m. business time, so it has to be 6 a.m. on the Pacific Standard Time, right? So if I live in California, which I live in California, so if I live over here, I got to wake up 5:30 so I can be up before the market, and then as soon as the markets open, I can look at whatever's happening and then make decisions within that first 30 minutes or within that first hour of whether or not I'm going to stay here or I'm going to move my assets. That is really stressful, okay? That requires a lot of work. That requires a lot of backbone and a lot of mental toughness, because if you're in the game where you're doing it on a daily basis, now granted, check this out, okay? This is why those guys can actually make as much money as they do, because of the fact that if you're good enough, and by the way, all of those same rules that we talked about, the other person with the buying and holding of reading into the company and reading into this and reading into this and like doing, you still have to do all of those things as a day trader and then some. But if you're good enough and if you notice something in long enough in advance that you can move all of your assets or move all of the money that you have in this sector and pull it out and put it in this sector and do it before all of the events that are about to take place actually take place, then you can double up, triple up, quadruple up, multiply 10x in one day, right? You can. It is possible. However, how probable is it? How likely is it? I don't know. I got out of that game, right? Because I just didn't want to deal with the headaches of it. But more than anything, I feel like this video is just for people to understand, number one, the difference between these two. So what is the difference between a day trader and somebody who actually just buys and holds stocks to see how it plays out? And so, by the way, just so you know, one of the guys that I interviewed, he's now like a young man. I think he just turned 18, 19 maybe. I interviewed this kid 2 years ago, okay? And Deji, by the way, so real quick, can we check to see if it's about to cut off or?
It's at 10:03.
10:03, so should I just stop real quick and then we'll just pick it back up? Because I don't want it to cut out. And I have maybe like 5 more minutes.
Okay.
So can we do this real quick? Mm-hmm. So pause, ready? Go, pause. Cool. So I interviewed this kid maybe 3 years ago, 4 years ago, when I knew that I was gonna kind of get into the media side of the business and actually start putting out content around finance. And so, he's this Persian Jewish kid. For his bar mitzvah, they gave him, like collectively, he got $5,000 from all of his family members, and he decided to go into the stock market. And he's really, really into cars, he's really into technology, and he's really into he's into the game, like he's interested in this stuff. So he naturally would just read around it, so on and so forth. He ended up, at that time, Mercedes was doing really well. Like they were really hot. Everybody thought that they were gonna blow up. Blow up bigger than they were, so on and so forth. They thought they were gonna get a much bigger share of the market, all of those things. At that time, Tesla wasn't that big of a deal yet. They hadn't grown into the massive company that they are right now because Elon Musk had kind of just started that company. So he looked into it because of the fact that he was also interested in energy, because of the fact that he was really interested in cars, and then he saw that Tesla came out with the Roadster that was supposed to be the first performance car that was strictly electric, and he thought, you know what, I think these guys are going to end up doing well. So he pulled out his money, his little $5,000 that he had in Mercedes and a few of the other companies, and he put it into Tesla, and he put it into a few alternative energy companies, right? Then Tesla took a hit with their Roadster. The same idea that they thought was going to end up making Tesla a really big company and making Tesla a really popular company, which was the first ever electric performance car, the Tesla Roadster, that idea ended up not being practical and it ended up not making it. Now what this kid did, he didn't pull the money out of Tesla. He didn't pull it because that's day trading, right? The moment that something like that happens, they're like, oh crap, Tesla's losing money, let's pull our money out of Tesla. So he didn't do that. He bought it. And then this happened and he goes, you know what? I still believe that these guys are going to end up making it. And yeah, I kind of took a hit right now, but I feel like these guys are actually really going to end up doing something pretty major. And so he stayed. Long story cut short, in a 3-year period of time, based on what he chose to do, his entire portfolio, including all of his losses, went up 150%. Including all of his losses, he was up 150% in 2.5 years, 3 years. That's somebody who did his due diligence. He had the right mindset as far as, I'm not gonna just drop and let things go the moment that it takes some kind of a hit, because then he would have not been able to get to where he got to currently with his investments. He said that I'm just gonna stay. I'll stay. I'm gonna buy it. I'm gonna read everything. And at that time, there was nobody that was even close to being a competitor with Tesla anyway. It was kind of like Tesla was the only one in the electric car market at that time. So it wasn't like there was going to be any kind of a competitor anyway. And so, he stayed. And it was a great decision for him. And it went up. You know what I mean? So it depends on who you are. It depends on what your goals are. It depends on where you are in your life, what phase you are in your life. It depends on whether or not you consider 6% return annually to be a big deal, or you think 6% return is nothing, right? It's fully dependent on who you are and what your goals are, what your perception in life is, and where you're trying to go with your investments, right? I would highly, highly recommend, before you put your money into anything that can lose, I would really recommend sitting down, cut off everything, cut off all of the music, the TV, everything. Go put yourself somewhere that's completely isolated, that you can think without being interrupted, and really sit down and think about what is your personality type when it comes down to money. Are you conservative? Are you super aggressive? Are you in the middle? Are you scared that, like, yeah, I just don't want to lose anything? You know what I mean? Like, just figure out who you are, because when you figure all of that out, your investment strategy is just going to be really, really easy to figure out. So that's what I would recommend to you. I hope that it actually gave you some kind of an idea of the difference between day trading and buying and holding, and what all of these different things are, what the pros and cons of each one is. And then based on that, you know, you can make the decisions that you want to make with your money. We do have licensed consultants available. However, I will say this to you, that I personally am not actively in the securities business. I'm not in the stocks business. I don't think I'm going to end up going to that. I do have partners who are in those businesses that they do extremely well for themselves and for their clients, but I just don't want to touch it because I just don't want to deal with the stress of it. If you want to be connected to those people, let me know. We're probably going to have some kind of a link below that you can request to speak with one of the consultants, or if you want to just be referred to a company that actually does securities, if you want to be referred to a company that does day trading and you want to outsource that for yourself, we'll probably put some kind of a resource in the comment section below or in the description below, and then you can decide to do whatever you want at that point. So I'm just going to leave it there. I think that was a pretty concise episode. I think we went a little bit over the time that I had allotted for this. So I hope you found it valuable. Please subscribe to the channel, comment, like the video, share it with everybody that you know. And then after this blanks out, you're going to see all of my personal social media. Make sure to follow me, start up a conversation. I'm really friendly. I love talking to our subscribers. I love talking to our community and everything. So I think it's going to be pretty fun. And that's pretty much it. So my name is Arman Vakili. This was #everythingmoney, and I'll see you in the next one.